Reasons why not to market your group benefit plan. The traditional approach taken by most benefit consultants is to take your benefit plan out to the insurance marketplace for pricing. This, however, is a short-term solution and not a sustainable practice. This is at best a knee-jerk response to costs that are climbing out of control and doesn't address the real issue of getting claims in hand. It also doesn't address the long-term need to fixing the problems or what the costs of making the change to a new benefit provider really are. Inevitably, when marketing your benefits, some insurer will come in with a lower price. Someone will buy your business and upon renewal, jack up your rates to compensate for the first year. All the insurers use pretty much the same actuarial tables, so whoever wants to buy the business will do so on price. If looking over a 5-year period, all insurers' rates will be right around the same level unless they put some cost containment measures into play. So if you're chasing a rate only, you might want to negotiate with your current supplier and save the transition headaches because you will inevitably end up around the same price over time. The other thing to consider is every time you move carriers, you forfeit your IBNR reserve and need to build up another one with the new carrier. The other factor is the cost of making the change. Employees need to be communicated to, processes are different, and the company goes through a blip when trying to figure out how this benefit company works compared to the last one. The time that it takes administrators within the company needs to be measured as well. Collecting enrollment forms, coordinating for education with staff, and managing payroll and administrative processes with a new benefit company is costly to a company's resources. You need to compare your plan today to the new plan, and are there any differences aside from initial price? Factor in any value-added benefits, understand what cost containment strategies are in place, if any. A great litmus test is, if we did nothing to this plan, at current claims rates and trend, what is a realistic expectation for a renewal rate? If an insurer won't give you this, then be very afraid come your first renewal. You will be able to see how much below market rates that they really are. The only way to create long-term sustainability for a plan is to put real cost containment strategies in place. If they don't have cost containment strategies, then expect to go to market again in the next year or two. Remember that today's claims represent tomorrow's premiums, and the only long-term solution to keeping premiums at bay is to manage claims. Managing claims doesn't need to come at the expense of benefits provided. If you have any questions or have gone through this charade enough, contact Performance-Based Benefits and understand that solutions begin from a place of understanding.